Here are the steps to buying a home in 2023. Step 1, create a budget and get a better sense of your income and existing expenses. You can do that with tools and calculators that are available online, or you can have a go yourself. Step 2 is to speak to a mortgage broker. Mortgage broker helps you compare lenders and various options, runs through your scenario in detail and basically understands exactly what available options are there for finance. Step 3 is determine your plan and strategy. What do you want to achieve out of the property? For example, do you want to go down the path of an investment property, or do you want to move into an owner-occupied residence? And what are the pros and cons of each? A strategy will help you weigh up the benefits and risks and determine exactly which way you'd like to go. Number 4 is to understand your limits and know exactly what limits you have on your lending and your risk appetite. Just because a bank may lend you a certain amount of money, it may not mean that you're comfortable with doing that. So have a good think about exactly what limits you have in place. And if you're borrowing with other people or other parties, make sure that everybody's comfortable with what's going to take place. Once you know your limits, step 5 is to understand what schemes might be available to you. For example, if you're a first home buyer, there may be a range of state and federal government schemes applicable to you, which help bring forward your purchasing decision. Once you've considered that, step 6 is to look at pre-approval. You can go directly to a bank to achieve this, or you can go to a mortgage broker. You've got to be careful with pre-approvals because they're not all equal. You want to make sure that you get a fully assessed pre-approval so that you have confidence when you go to purchase a property that you're likely to obtain finance for that property. Step 7 is to do a bit more research in detail about both the property, the suburb you're buying, and the overall market trends at the time. You want to consider all of these factors as they have a really important impact on the future profitability of the purchase, potentially, how much it's going to cost you to service, and whether in fact you can afford and are willing to take the risk in that suburb. When you've finally found the property that you're after, you're likely to want to make an offer. So you should consider having everything in place before you make that offer. For example, have you done a building and pest inspection on the property? And does everything seem like it makes sense? Like, are you comfortable? Have you spoken to a lawyer? And are things adding up? If they are, you could make an offer on the property and see if that's accepted. Make sure that you're comfortable with mortgage repayments and exactly how that's going to work once the property settles. So take that into account in terms of how you're planning your cash flows for the future periods. Make sure that you're comfortable that if interest rates changes, you're going to be okay. Finally, make sure that you have an exit plan. An exit plan is an important part and really should be done early in the process to make sure that you've considered potential eventualities and how you deal with them if they should arise, as life happens and things come up from time to time.